Market Update with Ann Dunford on RealAgriculture.com is brought to you by Haney Farms. Do you need seed? Find us at haneyfarms.com. And let's talk about the market conditions right now. There's obviously lots in the news with the beef industry. We've got obviously some packer issues. We're currently down to one Western Canadian packer killing cattle. A lot of producer concern, or a lot of producer thinking about what's going to happen with these markets. And I think the first topic that comes up is basis. What is happening right now with basis, and how much more can we expect it to possibly widen?
Okay, so first of all, I'm going to kind of slice that up a little bit because we want to talk about the conditions we had for basis for fed cattle before the recall. And then we also want to just touch on a little bit on the feeder cattle and calf side of it as well. So there's a whole bunch of different things to talk on. First of all, let's talk about what was basis looking like before the middle of September. And of course, we had been struggling with a very wide basis. And basis, for those that aren't quite in the loop of selling a lot of fed cattle, it's just simply the price spread, if you will, between our Western Canadian price and the price in Nebraska. So it's just the difference, accounting for the Canadian dollar, etc. So we've been at a wide basis level for quite some time. Again, if you've been selling fat cattle this year, it's been a disappointing year. All year long, we've been $5 a hundred wider than even 2011. So it's been a weak basis year. That's how we define it. So coming into the fall run, we were most certainly struggling in that -13, -14 area coming into the middle of September. Now, as we head into October, that number is now widened. Last week it was -15, 2 weeks ago, and then last week it was -16. So what's happening as we have to start to move cattle further away, more freight involved, that becomes part of this number, and that's that basis getting weaker, getting wider. So our price relationship vis-a-vis the US gets a little bit weaker all the time. But we most certainly didn't start at a very strong point, as I guess what I wanted to start with. We had a weak basis, and now it's getting wider. Your question, where could it go? I guess the question then is, how long do things remain disrupted here in Western Canada from a slaughter perspective, and how far do we have to move fed cattle and non-fed cattle, slaughter cows and bulls, to market? So the further we have to go, the more freight's involved. We could see basis, if it was -16 last week, it's really not out of the question to expect numbers to be around -20. Have we been there before? Sure we have. We were there last year at this time. So it's market conditions send us to -20 more than we'd like to admit, but it looks like we're going there again.
Do you remember what the widest basis is for October, November before?
Well, it would have been off the Richter scale during BSE.
Okay, so, well, yeah, outside of BSE,
okay.
Yeah.
Outside of BSE, it can get into these low -20s on several other occasions. So
okay, so this isn't abnormal. We've been here before.
Yeah, although I will go on to say, I think the expectations generally, and of course we all expect great things from the marketplace, the expectations generally speaking were that basis levels would narrow as we go into November and December because of significantly smaller on-feed supplies in Western Canada. And for CanFax members that see the cattle on feed report each month, that report even this past Friday suggested on-feed numbers as of October 1 down, pretty good from last year. So unfortunately, even though we're going to be in this -16 to -20 range now for the next undefined period of time, it looks like, the problem is I think there was a lot of expectation that it would get narrower as we went through the last part of this year.
And what I guess from a cow-calf producer standpoint, where are they honing in and focusing right now, and where do some of their concerns lie?
Okay, well, good points. First of all, let's talk about feeder cattle. Granted, we're into the middle of October. A lot of that grass run has happened. The bulk of the grass yearling cattle, trade historically in August and September. So the bulk of that trade's behind us. Now, the cattle that are still out there trading, the heavier weight feeders, obviously, anytime you're trading cattle into unknown marketplace situation, and a wider basis situation, it's going to play on the marketplace. So basis is still not, quote, out of line for what we'd say. Last week we called it an 8.5 feeder steer basis in Alberta, about a minus 11.50. Well, if you go back and look at the same week last year, it was minus 11. So those haven't got out of line, but they, again, I think the expectation is they would be starting to improve now. On the calf market, same thing. I think a lot of producers kind of stood back when this recall occurred last month and kind of, well, let's see what's going to happen. And so as a result, offerings, or the volume of cattle, calves especially, moving through the auction markets right now is very small, and it has helped keep the price very strong. So if you're just looking simply at prices, they're maybe off $4 on average, according to Canfax now, compared to, say, what we were a month ago. But again, some of that could be, you could write that down as seasonality. Normally prices on calves weaken into the fall run. But again, if the run picks up and we've still got a lot of unknowns ahead, I think you can also assume that the calf price kind of heads towards the export floor.
And sorry, what is that export? Can you explain that export floor and what that means?
Okay, well, simply put, it's what the price difference between U.S. and Canada is for what it takes to move cattle into either market. So if our market has to drop to the point where you all of a sudden have U.S. buyers interested in the cattle, be it fat cattle, be it feeder cattle, be it calves, it's that price point. So basically, it's the freight cost into whatever market. So let's say it's a freight cost into Nebraska on a calf market, that's going to be about $12 a hundred. If you do the math today, and you said we have to go to the export market tomorrow, it does mean there's pressure on calf prices out there, maybe to the tune of $5 to $10 a hundred. So that hasn't happened yet. And again, if we had some, better knowings about the marketplace going forward, and don't forget, the calves really don't impact production until well into 2013. So it's all going to be a little bit on the demand side as well. We've got feedlots with a lot of empty pens. Granted, there's been a lot of losses in cattle feeding country this year. And so, what's going to be the driver for these calf prices? That there's fewer of them. How much can they withstand of all this unknown news?
Yeah, there hasn't been a lot of black ink for feed yards in southern Alberta, and I think with the issues with the recall, there's a lot of concern that the prices are going to go lower. To this point, though, we haven't seen prices do that big drop. Why is that?
Well, again, like I've just explained, we've been able to access the U.S. market. So granted, we're maybe not processing them in Alberta today, but what's happening is there is increased exports, especially of fed cattle and slaughter cows, into the U.S. market. So those cattle are making their way to a slaughter facility. It's on the other side of the border. And again, the numbers are such that we are able to get through numbers. We only have data to the end of September at this point in time. So there's a lag in this data. For the end of September, that last week, we saw about 8,600 fed cattle go and about 4,500 slaughter cows go. And those numbers are up from where we were prior to all this occurring on September 17th.
So does this open capacity? Is this a long-term plan or long-term strategy for us, or what?
I don't know if you'd call it a plan or a strategy, but the bottom line is, and I think those have been following kind of the structural changes in our marketplace. When I say our, I'm talking about North American. We've had a situation where, of course, we've got lots of extra capacity at feedlots because our cattle numbers have been down quite a bit. U.S. droughts for 2 years, and of course the Canadian herd selling off hard since 2005. So cattle numbers are down. There's no question about that. So you've got X number of feedlot capacity. Well, all the pens sure aren't full. And the same thing's happening on the packing plant side in North America. There's a lot of additional packing plant slaughter capacity out there. We're not going to wave a magic wand, and it's not going to all be in the right place regionally at the right time. But if you were just to say, take the big picture, there's more capacity than there is cattle right now from North America.
And so can we expect if we keep with the current situation with only one Western Canadian domestic packer of significant size, can these prices hold then?
Well, my concern would be over time you continue to have a wider basis. Your competitive nature of a Western Canadian cattle feeder vis-a-vis as U.S. counterpart continues to weaken, and so can can a Canadian cattle feeder withstand wider basis over a long period of time when they've already been losing money all of 2012? So then it starts to come down to well, maybe we can get the cattle dead, but can we fiscally survive it? So I think that's the other side of the question.
Okay, and thanks a lot. And I'm sure as this whole saga unfolds, we'll have more and more questions in 2 weeks.
Okay, thanks, Shaun.